Okay, Mohammed, are you referring to this? Okay, cool. Let me quickly clarify. Okay, if you remember some time ago, some sessions that we had, and I was telling you about when we have PC, forming, and at the same time we have a market structure break, that I would respect the PC above the market structure break. This is the reason. If we are having price hitting a particular area, so let's assume that's a PC. Price is hitting that area, and then we have a market structure break. I don't think that's a good depiction. Let me use. So this is it. So we have price doing that. So we already have that this is a PC candle, tap one, another tap, and then over here we have this market structure break. Yeah, then we're looking, okay, return to origin. Now we're gonna go long. But this PC is still active. We don't know if price will hit that and drop lower again. That is why if I see a PC forming along with a market structure break, I wouldn't just take the market structure break. I will allow for the PC to be broken. When the PC is broken, it confirms many things. There's a market structure break, multiple market structure break on different levels, and then you can come in and pick your entry. It could be a PC entry, or it could be, a return to origin within the PC. Okay, that's the reason why I didn't take this trade short over here. Okay, that's the reason why I didn't take that trade short there, because we've had this bounce. So there was multiple bounces, bounce, and then we had this come down, bounce, go up, bounce again, but it's a small market structure break there. So if you decided to trade the return to origin here, it would have been a loss. And look at what happened. Price rallied up. Okay, it started having bounce, multiple bounces here. Market structure break, return to origin, another PC entry, boom. Okay, Mohammed, did you understand that? Type a Y if you do. Okay, cool. All right, let me go to what I wanted to show you guys. Okay. So what I wanted to show you is what am I going to call it? It's an extra confluence of um or an extra discovery that I've been playing with for a while now, and it's still looking at extra RTO source. It's still looking at, if you watch the video that I did on daily bias theory, how to trade, find bias for the next day. Still coming from that foundation, and here's what you would see. Okay, now this one is pretty interesting. I use that for all my trades this week. Bear in me, let me go show you the slides of the trades, then I'll explain everything to you. So bear with me. Tell you what, I think I'll just take you to the charts straight away, because that would just make life easier. Hold on. Hey Calipe, what's up? All right, guys, I'm really hoping that this platform don't crash on me. It's been acting funny recently. I don't use it to trade. I just use it to train guys. Okay, so let's go. First of all, let's go to the daily time frame. Let me start with a clean chart, extremely clean. We don't want anything on there. I call this clean. Let me clear everything out. Bear with me, guys. Control B, and delete everything. Okay. Okay. So let me go from the daily bias thing. So for this daily bias theory, you can start from weekly. Okay. So as this week, last week closed aggressively above the previous week. Therefore, it's telling us that we have an 80% opportunity or 80% likelihood that we'll be going long this current week that we are in. Okay. The same thing if you did that on a daily time frame, we can use that as well to frame our trades. So, we'll frame our trades around the same setup. So we got this aggressive close above that previous day. We have this as well. Sorry. So we have this day, not so aggressive, but it's a close above it. Okay. Now here's what I found out. Okay, here's what I found out. Once we have this level marked out, okay, we then come to look at the current day that we are in. And this is EJ, by the way. I've not posted it, but I took this. It was one of the trades I took today. So if you now came to your H4 time frame, okay, today look at what it did. I think this is around 6 a.m. in the morning. Okay, that's 6 a.m. in the morning. What it will do is they will use that level, around that level. You can use you can have more confidence to trade our normal H4 stop on setup. Okay, around those level, most of the times as well, we always have our H4 causes there as well, which is giving us like another extra layer of confidence to trade. Okay, for now, I'm not going to show you because that is our bread and butter. Like market structure break, return to origin, and all that stuff is taking place. I just want to show you how they reuse this levels. A very good example as well was Kiwi. Kiwi. My chat is frozen, guys. Um, Come on, don't do this to me. Okay, Kiwi. Let's get a pretty chart. Okay, I don't know why I chose this template, but okay. So I'm gonna mark off the aggressive point that price close above. So let's start from here. See this day close aggressively above that day. Therefore, he's saying the following day that it's a high probability of being a bullish day as well. Okay. Now, so you can decide to only look for a long setup, and if you did, that day was bullish. This day was bearish. But look at what happened when they came back to that level. This I'll call a perfect trade. Okay. If we went on to H4, you will see that they reuse that level. And do you know what I started to call these levels now? I call them validation points. I call them validation point. Look, can you just see that H4? That's a 10 p.m. H4 stop hunt. Stop hunt. Look, boom. Price just went up crazily. Okay, from there. Let's go back to the daily. So now they use these levels over and over again. So we have another day close above this day. We'll mark out that price. And as this day closed higher, the following day, guess where they came back to? They came back to that same level we've already marked out. Okay. If we went into the H4, we'll be able to see a stop on, and possibly we could see maybe a cause there, H4 cause. Look, can you see the stop on? And then we have a H4 stop on, H4 cause here as well. So everything is marrying themselves nicely. And what time is that? That is also 10 p.m. Yeah, 10 p.m. And look, price rallied. Okay. So I call these levels validation points. That's what I call those levels. And the reason why I call them validation points are is simple because the banks, they're validating towards the direction which price wants to travel, the direction which they want to go. So here's another point. This day, Wednesday closed above Tuesday. And as Tuesday closed, the good thing about it is when Tuesday closed, it was aggressive. This move up was aggressive, but that distance from the high to the high of Tuesday wasn't that much. So um, there was a higher probability as well that they'll come back to that level again to use it. And guess what? Today, I think 10 p.m. yesterday, exactly what they did again. Look, went back to that level. So this should give you more confidence. And guess what is there again? We have a H4 cause. So now you got like 3 layers of confluence, okay? You get that validation point. I call them VPs, okay? That validation point, and then you get a H4 cause, and then you get stop on into that level around, you know, that level, and that's 10 p.m. again. Look, bang in that level, stop on into it, and today was amazing. Now, the other thing you can do with validation point is you can use them as a target. So you can use it as a target. The thing about it is when you have them marked out on your chart, okay, you can wait for price to just get there and wait for a reaction. If you get a reaction, you get an H4 stop on into the level, it should increase your confidence level of taking that trade. Okay. This works a lot of times. Okay. A lot of times. Would there be the once in a while times that you lose a trade? Obviously, yes. You guys all know now. And guess what was on that level again? We got you know, H4 calls over there. Price stop hunted into there and drop down. Okay. And Kiwi has used that level very well this week. They just done it very well. Like they're up, use the level up from there again, and they just continued up. Okay. What I also notice sometimes is when the market is also in trends and we have aggressive closes like this or like this, they don't always return all the time back to that validation. What's that? They don't always return to the validation point before the turn. They could turn, just before they get there. Okay? They could turn around those levels. And when they close aggressively below like that, they would not come all the way back to that level before the turn. But when the distance from, is not that far like this one now, they're most likely, coming, they will touch it and then move off. But when the move is aggressive like this, I don't expect them to, tomorrow to come here before they say they want to go higher. Okay? So that's the validation point for you. Let me look at some questions I think you guys might have. Ramsey, yes, it's because of that. Yeah. So does everybody understand what I just showed now? So we'll go into more examples. Yeah, Ramsey. More examples. Brilliant. I'd love to do that. Okay, let me clear the charts. So uh, 80%. Okay, 80% is good, Ramsey. um, I'm looking for a clean chart. I don't know if I have one, but I use this one. Control B, Control A, delete. Okay, so more examples. So we are back on the daily. So we mark our validation point. Yes, I will tell you why. So in fact, let's go to Sweezy straight away. If I go Sweezy my chart. Okay. Okay, so we start marking validation point on the weeklies. Um, so at the moment, we didn't have an aggressive close below here. So, but the direction on the weekly that is giving us is that we're going lower, okay? And then if you also look at this line that I've drawn here, it tallies with this validation point. So it's actually this validation point I want to draw out for you guys to start with. Okay, that was the reason for this bounce and this bounce here, up here. But when we go to the daily time frame, we'll see more levels. So we can see, look, validation point there. Let me change this color to black for daily. Okay. Yeah. So look at this. So we had this day close above. So today is Thursday, Wednesday. So Wednesday closed higher above Tuesday. But guess where it went to? It went straight to that validation point. A validation point is an area of you can call it. I don't know if it is a support and resistant area. I don't know if you can call it that, because if you can call the previous a low, so validation points that I look at will be monthly, weekly, and daily. That's it. Okay. So I don't know if you can call the highs or lows of those periods support and resistance levels. If you want to call it that, then that's actually fine. Whatever works for you. But this is it. What I know is those levels, I understood it for showing me directional bias and all that stuff, because I had to go investigate and research and check the charts when I was trying to help some of you guys find bias, because obviously that was one issue that we had to resolve. So I didn't read that from any textbook or anything. It was just mere, looking at at the chart. I already told you guys the way my brain works. I work in pictures, I work in patterns. That's the way I see things. So I was able to identify that. And then the next thing I swiftly identified is those levels are always being reused. So you can see price rallied into that level. And when we got there, we got a reaction. So here now, if you saw on your chart, you were seeing a stop hunt, a H4 stop hunt into that level. And then you start seeing every other thing that we look for, then, it will be good to go. Look at that, beautiful. That's just a perfect setup. Perfect. And guess what? Around that area, what do we have? H4 calls is looking there. Now, I didn't see this when I was using the validation point but later when I started, taking notes again, I'm like, hold on a minute. Those validation point actually have all these causes around those levels. So that's an extra validation, extra confirmation for you. Okay. Okay, Ramsey said, can you give me a definition of how to draw the validation level? Ramsey is very simple. Pick any higher time frame chart. Let's even go to monthly. So when you see price break aggressively below this previous month, that level, that is a validation point. See, this one is closing below that. That is a validation point. See this day close above this, that's a validation point. Another one this week, a month close aggressively above that, that's a validation point. Okay, it's really really simple. I mean, you guys have started coming up with things I don't know now. PML or PMH or weekly. What does that mean, Ramsey? Previous month high. Okay. Well, I like those fancy names as well. Previous month high. So that's PMH. Okay, Sufi is asking, so any month or week or day closes above the previous one, then that's a validation point. Yes, it's a validation point, sir. I mean, those validation points are pointers to tell us the direction that price wants to move, okay? And the quickest way to find it, I mean, we can get direction on weekly and then trade it on daily. So daily close, one day close above or below the previous one aggressively, therefore, is giving you a high probability that the following day is going to be following in that same direction. Okay. Now, the work we then need to do is to find when to enter the trade or how to enter the trade. When is the correct time? So I mean, for us to know the direction of the following day, I think is, should I say, 80%, no, let's call it 50% of the traders issue sorted out. And then the remaining, maybe another 10% is going to be down to your entry types. And then the remaining will be your psychology. That do you trust yourself to do this? Okay. If you've not watched that video on daily bias, please go watch it again. Okay. Guys, bear with me. My kids are acting up. Hold on 2 seconds. Okay, guys, I'm back. Sorry. Just want to sort out the baby of the house, my son. Okay, Sufi, he said, so look at this chart now. We would expect bullishness now. Yes, that's our expectation. I like that word, expectation. But if it doesn't give it to us, then we wouldn't do anything about it. So we can then go into weekly, day. So as you can see, as we're toggling through the time frame, you can see that level there. So price is about to hit it. So are we gonna hit it and change direction? Who knows? So if you've entered the trade over there, your target, your first target will have been that VP area, the bullish, and then once you get that, you keep going. This will be the next target for you. Okay, those areas are very good for targets as well and reaction levels as well. Very very strong, very very strong. Let's look at GU, and as you can see, GU monthly has been giving us nice. So drop, drop, yeah, until we have a reversal. And where we having it, we got a validation point here. We got another one there. Okay. So this validation point and this validation point. Okay. Price came and hit it there. Let's go to the daily. Sorry, weekly. And weekly, look, that looks perfect, doesn't it? And then if we go on the daily, we'll see the the turnaround will be quicker on the daily. On the daily time frame. Whilst our target as we're going higher, if you decide to go higher, your target will be there. So once you hit it there, look, there was reaction, price dropped. Where did it drop to? The validation point of the week. Let me put that in. Yeah, went nicely into it, kissed it, and then we reaction there. Let's go on to the daily to see clearer. So that's the month level we marked earlier, and look, the reaction level of the weekly there. Yeah, and then you will have seen early signals on the daily as price started closing higher here. So higher close there. Another validation point there. Look, it was reused over here as so as that price is rallying, take profit levels. So these would have been your take profit levels. Yeah, levels and reaction levels, and boom, we had reaction over here, and price dropped straight away to that validation point of daily, and look, off they went from that level again, up, close higher, came lower here, and then up again. Where did it go? That was the monthly validation level that we drew out. Look, hit it nicely, reaction there, and then price started dropping, validation point there. Let me draw that out. So that's a validation point there. Another one here. Another one there. So now as you're coming down here, you will have in mind that I got this validation point over here, and this solid weekly, I had a weekly one over here. Okay, so you should use those as you're coming down. That would have been your target, and then you'll be waiting for, okay, let me see what the market is going to do around here. What is the market going to do for me? And then you would certainly see that it will give you the signs that we normally look for, the things we normally look for to give you the H4 stop-ons. Look, H4 stop-on. So you could have taken the trade here, so maybe you lost over here because it did a triple hunt over here. It was triple. And then it finally came. So this level was the weekly level we marked, and that level is a daily, okay? And then it came in. We'll have had a beautiful reaction there, and boom. First target was that validation point that we drew there. Boom, done. And then we start marking it up. So that level up, let me swap this over. So that's a validation point. Oh, Ramsey, I thought you day traded. Okay, so let me mark out the validation point, then we can give examples. Okay. So now on the daily, so what you can do is this, okay? Like, don't forget, I told you validation point does two things. You can trade off of them, or you can just trade using them for direction to say, based on that video that I showed, you can say, okay, if prices close aggressively above this level, like we saw here now, like like we've seen here, you tell yourself, I'm only looking for bullish setups. Okay, I'm only going to look for bullish setup. Okay, then you can get more strength by, if price closes aggressively, if when price closes above or below a previous day, I will be happy if price came back to that level and it give me my setup, my normal setup. I'll be confident to take that trade higher again. So you can decide to actually say, you know what, I don't even care now. I'm just going to be trading when price comes to those levels. If I get my stop hunt, H4 stop on into the level, I'll look for every other thing. I'm trading off of that level alone. If you do that, it will, it will help, in you getting things right most of the time. So, for example, this day closed above that day. it didn't come back to that validation level. It didn't. But you'll be right there going long here. Look, this, you'll have had a long opportunity there to trade because price opened, came down, then went up and came down and closed. So, and this day again would have been a beautiful setup for long again. Guess what? This day then closed above this point, okay, because we will have them marked out. So, look, that day opened, they came to touch it nicely and they ran off. Ramsey, I'm gonna go into the lower time frame time soon. Hold on. So we mark this level out again. No, it's a serious question, Sufi. Sufi, to be honest, I don't know how long they're valid for. Okay, they could decide to use it as many times as possible. For example, when we looked at the weekly, I think was it the weekly or the monthly validation point somewhere. They used that monthly level a few times. Can you see this level over here? This one, they use it once and then use it again over here. So sorry, that one on top. Let me clear the chart. So this level, so it was used more than once, okay? And I think the reason why those level would work as well is because obviously we know that every price point has to be fulfilled. So when prices close aggressively above a level or below a level, the gap between the high and their own highs, or in the case of shorts, the low and the previous low, that's a lot of price levels to be fulfilled where orders have not been fulfilled yet. So markets would like to fulfill all those orders. That's why we will find them coming back to fill this level and close it to the low of price of the previous price. Okay. All right. So Ramsey, let's go into a lower time frame. Let me change the template. Okay, let's mark our validation points quickly. I like starting on weekly anyway. So we got one here. We got one there. We got one there. And then on the other side, we got one here. Let me change this ones to red or blue or whatever. That's one there. Another one there. Okay. This low, the only time we close above this low is this candle over here. Close below that low. So yeah, that's another validation point. And just look at how they used it. That week closed and they came back. They came back to that level and then boom, they just exploded down. Okay. And then coming back up again, guys, forget about those things on the screen. So look, the levels we've marked them now, the going up and that's going down. Let's go into the daily time frame now. So on the daily, we'll have our levels. Let me use the squares to do the dailies. Okay, so this level. Oh, the box has disappeared. So we have that level, we have that level. Yes, there's a kind of level I wanted to explain to you. You can draw it like that, where it's previously a validation point, but price crosses above it, they will use it again. But don't get confused anyway. Don't just stick to this normal one. So here's a validation point. Here's a validation point. Here is another validation point. Okay, that's for the short. For the long, we still continue this level here, this level here, Okay, so I think one more for me to mark that one. So I implore you to just go play with this, okay, on your chart. That's another one. That's another validation point. That day closed above it. This is another validation point. Here as well. So can you see that day? Price closed above it there. Okay. And look at how they reused the level. So let's now go into lower time frame. Yeah, right. Yeah, Ramsey, you can you can call it breakout levels if you want. That's why I couldn't call it support and resistance levels. This is what helps. This is what was linked to the daily bias video that I showed. I then quickly found out that those levels are always reused, and it's perfect for our stop hunt return to origin, H4 stop hunt rather return to origin trades. So let's go into the lower time frame. Let's go 5 minutes. Okay, so for example, today I think from 6 p.m. yesterday, they came yesterday, they used that level over here for a trade. Okay, we had a stop on of this level over there, market structure break. Yeah, could have entered there. That looks like a PC there, and you'll have got that day trade. Yeah, even when price is returning, you shouldn't be afraid of it because we've closed aggressively. You could do a re-entry to go, long. And by this time, I'll have closed my trade for the day. And then yesterday happened with crazy run up, and then drop down. And where did he go to? He went back to that level again. Yeah, there's a stop hunt of the previous day. That's what he did. Previous day stop hunt. Market structure break there. Let me zoom in. So previous day stop hunt. Market structure break here. Okay. And we have this huge candle to pick from. Okay, that you can still decide to be conservative and just like, okay, and because that stop is going to be huge, you can decide to just put in 0.5% of your account onto that trade, and would watch price rally up, aggressively from there. So what matters, they use that level. Okay, let's go into another day. So as you can see, they use the level that we've already marked. Sorry for that, skipping back. So look at how they use the level again. That day close aggressively higher than that. Look, so some of you could have cut this trade down. Okay, take target here and wait for reaction. And over here we have a stop hunt of all these H4s. Market structure break. Yeah, that looks like a PC. Could we have a tap, break, return to the PC, and up you went. Price came down again for another opportunity to long. Okay, let's keep going back. So look at this day, for example, this one here. That was a previous day high, and price came nicely stop hunted into it, previous H4. So this would have been stop on all these H4s. Okay, into the level. So everything we look for still remains the same. Everything we look for remains the same. Market structure break, previous H4 stop hunt, price cap and all that. Those are our entry patterns. And, you just watch price explode away. Okay. It did the same thing on EJ. Ramsey. All right. So everybody, do you understand this so far? Yeah. Um, let's look at one more, and then we could then go do some exercise. Please send me charts and all that stuff. I'm happy to look at them. This is so powerful as well. You can just add it to your arsenal. So are we okay so far? I got 10 more minutes on here. Okay. Have you got any questions? Yes, Ramsey. So the question is, in a nutshell, a close above or below on a daily will give you next day's potential flow. Yes, sir. Um, it will give you potential flow. Also have in mind your week, direction of the previous week. So if last week closed aggressively below previous week, that means this week we're likely to be, going down. But before it goes down, as with every candle, if a day is going to be bullish, it will first drop before it rallies. Yeah. So that week we'll expect maybe Monday and Tuesday could rally up to the validation point, and then at that level we'll now get what do you call it? A reaction off of that level. Okay. So Joseph WMD said something similar yesterday. Yesterday, okay. Bull candles flow, bull candles, and what's that? Bull candles follow bull candles, and bear candles follow bear candles. Well, we're all studying price, so if you can see it, yeah, we're looking at price. So yeah, that's a good observation. That's what I observed as well. That I came up with daily bias theory. Kali says always expect continuation. Yes. Um, so I hope this has been something good for you guys. And it's been a while that we've met. So I hope you guys are keeping up. Um, yeah, confluences and all that stuff. So I hope everybody's been keeping up, and I wish you guys continued success. And ICT, let's not forget the great one. Law. Okay. Daily bias, yes. Okay, so guys, please feel free to practice this, test this out. I know you guys are professionals in your own way. Test it out and validate them for yourself, and start using it. The only thing that you might have a block, is the psychology to believe the level will work. So yeah, demo it for a while and all that stuff. The week has been really, really good. For me, this week I was at home. I was at home settling the kids in school, so I was able to catch some stuff. Oh, Ramsey, can we expect a PDF and some good example? Like, do you know what's a good? Yeah, that's a good idea. I didn't even think of that. Yeah, I don't mind doing that. Yes, I don't mind doing that. I don't mind doing that. Cool, cool, cool. Okay, everybody happy?